Don't invest in shares before watching this video. Yes, you have heard that right. In today's video, we'll be tackling some of the do's and don'ts when it comes to investing in shares, that is companies listed in the stock market. Whether you are investing in the Kenyan stock market or any other stock exchange in the world, these are tips that will help you avoid most of the beginner mistakes that I see most of our investors making here in Kenya. Welcome to this channel. My name is Gertrude, and in this channel we cover topics such as investing, saving, budgeting, all things to do with money, how to acquire it and grow your money so that we can create wealth together. If you're new to this channel, karibu sana. That's what we say in Kenya, which means welcome. Before I go on rambling, let's get into today's topic, which is the do's and don'ts of investing in the stock market. I'll be sharing mistakes to avoid. Yeah, I've already said that, haven't I? Let's get started. Number one, have an emergency fund account. You might be asking, what does an emergency fund account have to do with shares or stocks? Well, the thing is, when you have a fully funded or partially funded emergency fund, whenever you encounter an emergency, let's say you need to repair something that is broken and you can't survive without it, you will not liquidate your shares. That is, you will not have to sell your shares to get money to fund your emergency. And I'd like to say this: if you don't have an emergency fund, you do not have any business investing in shares. So number one, as a beginner, before you start investing in shares, make sure you have an emergency fund account. And what is an emergency fund account? An emergency fund account is simply a savings account whereby you save 3 to 6 months of your living expenses. That means in case your car breaks down, you need money to offset a bill that you had not planned for, that is the account that you will get money from. Therefore, you will continue investing in shares without interruptions or selling off your shares or your investment portfolio prematurely. Yeah, so number one, make sure you have an emergency fund account. Number two, understand the basics. When it comes to investing in stocks or shares, what do we mean when we say a share? What is a share? Why do companies issue shares? Why would an owner of a company want to share the ownership of their company with strangers? Why would they? What does it mean when a company is listed on the stock market? What does it mean when the price of a share goes down? What are the risks? What are the benefits? How do I exit? How do I get out of the stock market in case I want my money back? So understand the basics before you start investing. Understand what you are investing in. General knowledge, and also when you choose a company, understand how that company makes money and so much more. So understand the basics before you start investing in shares. Otherwise, you'll find yourself complaining because you did not understand how things work. So number one, have an emergency fund account. Number two, understand the basics. And the thing is, there is so much information out there. For example, on my blog and also in this channel, I'll link a YouTube video explaining the basics of investing in shares and so many other free resources. Therefore, invest your time in understanding the basics before you start investing in shares. Number 3, stay informed. Yes, you've heard that, right? The thing is, with shares, investing in shares is not a one-time business whereby you put your money in a certain company and you leave it at that. Make sure you know what is happening in the financial markets. There are so many publications that ensure that you will you stay up to date. For example, I personally use 2, that is Business Daily and the Kenyan Wall Street. Make sure you are up to date, and also follow some accounts online. For example, I'll share a list of some of the accounts that I follow online, which I ensure that I am up to date with what is happening in the stock market. Apart from that, staying informed will ensure that you don't wake up one day only to find that the company you had put your hard-earned money into has already been delisted or is not performing as you would have anticipated. So, number 3, make sure you stay informed with what's happening in the financial markets. Number 4, and I believe this is, once you are ready, once you have an emergency fund account, you have understood the basics, you are reading the financial markets updates. Oh, one more thing, we have a Telegram community whereby I share daily financial markets updates, so feel free to join the Telegram channel. The link will be in the description box below. So stay informed, and also, yeah, just stay informed. All right, okay. Number 4 is to ensure that you set clear goals. Yes, just like with any other investment or financial goal, make sure you have set your financial goals. The thing is, investing in the stock market is a tool to help you achieve your goals. It is not the end goal. Such that when you say that I have invested in the stock market and leave it at that, no, that is just the beginning. Setting clear goals will help you understand when you can buy and when you can sell. Therefore, you will not be buying and selling aimlessly depending on what other people are saying. This will help you become grounded, such that now there's another point that I'll share later, such that you will avoid unnecessary losses. All right, so number 4, set clear goals so that you can know when to buy and when to go. For example, you can set a goal to fund your living expenses with dividend income from shares. Yes, that is possible. Therefore, for you, you will know that my main focus area is dividend stocks. Therefore, you will be able to make dividend income. So, yeah, set clear goals and know. And once you have set clear goals, you will know when to exit. For example, you can buy at 13 shillings and want to sell at 20 shillings. So as long as your goal is not met, you will keep holding. And once that goal has been achieved, you have made your profit, you can exit the market. So number 4, set clear goals. This will help you become grounded, such that you will not be chasing what everyone else wants to invest in, and therefore you will be in a better position to make it in the stock market. All right, okay. Number 5 is to minimize the cost of trading. Yes, one funny thing that I find with most people, most new investors, is that they do not understand how much it will cost them to invest in shares. Yes, there are costs when it comes to investing in shares. There are commissions that your broker will take, there are transaction costs, and so many other costs. So number one, make sure you know how much it will cost you to buy and sell these shares on the various platforms that you have picked. All right. Okay, why is this important? This is important because the high cost of trading or investing will erode the returns that you will get from your shares. So make sure you are minimizing the cost of investing or trading. Another thing is to avoid over trading. As a new investor, kindly do not over trade. Why? Because each time you trade, there is a cost incurred. So minimize the cost of your investment experience and also your trading experience. The next tip is to stop chasing hot tips. This is a very big mistake that I see most new investors making. They want to know, what are you investing in? What are the people talking about? I should put my money there. No, you should not. As we said, point number 4, set clear goals. Once you have set your goals, you will decide what is right for you and what is not right for you. Therefore, you can avoid chasing hot tips. Why? Because the moment that you chase hot tips, one, most of these tips do not help. Why? Because by the time you are getting this information, the professionals have already made their money and exited. So you will be buying high. Well, the rule of thumb is buy low, sell high. So buy low, sell high. The moment you start chasing these tips, you will incur costs, high costs of trading and so many other things. So make sure you have your goals set. Do not chase hot tips. Understand the basics and have an emergency fund account. And that's it. And I believe that you will be in a position to make profits and good returns in the stock market. If you have any other tips that you would like to share with us, feel free to share in the comment section below. And if you would like to learn more about how you can invest in the Kenyan stock market, feel free to join the Kenyan stock market course. The link will be attached in the description box below and in the first comment. Yeah. I believe that's it. Enjoy the rest of your day or night, and I'll see you in the next one. But in the meantime, you can watch any of these videos that YouTube thinks you will enjoy. And if you have not subscribed, what are you waiting for? Subscribe to this channel to receive weekly videos on these topics such as investing, budgeting, saving, etc. That's it from me. Enjoy the rest of your day or night, and I'll see you in the next one. Bye bye now.